He built his fortune from putting low interest rate, fixed rate debt for a long time on assets that were being driven up in value by inflation. Putting low fixed rate debt for a long time on commercial real estate assets or even residential that are appreciating quickly, that have all these great tax benefits too, is an incredible path to wealth.
I'm Kevin Attride, and I'm on a mission to help you with investing secrets, empowering you to succeed financially, changing your financial perspective and growing your wealth in good times and in bad. And when the next crisis comes, those prepared to weather the storm will achieve great success while the world melts with fear.
Investing Secrets with Kevin Attride.
Today we have a very special guest. Paul Moore of Wellings Capital is an expert in the real estate investment space. And the very first time I heard Paul via a podcast years ago, I was blown away by his expertise, his guidance, and how he's developing portfolios, real estate portfolios that stand the test of time. So I'm really excited to introduce Paul Moore, not only as a real estate investor himself, but someone who is helping investors go to 1,000, but also a man of character and integrity. Paul, so glad to have you join us today.
It's great to be here, Kevin. Great to see you again.
Paul, just tell us a little briefly about yourself, your experience, and about Wellings Capital.
All right. Well, I worked at Ford Motor Company, and then I started my own company in 1992. Ended up selling it in 97 to a publicly traded firm, which was an incredible blessing. And moved to the Blue Ridge Mountains, started a nonprofit organization, started investing in real estate to protect and grow my own wealth. And, through that, I ended up going through single family flips, rent to owns, property management, flipping waterfront lots at Smith Mountain Lake. I did a small real estate development subdivision, built a number of websites that generate leads for realtors. And over that time, I always wondered, how do the big, really wealthy people invest? And it seemed like they all invested in commercial real estate. I didn't know where the on-ramp was. I didn't know how to get involved. And honestly, syndication wasn't as famous in the early 2000s as it is now. And so I didn't know who to trust, where to start, but we ended up building a ground-up multifamily quasi-hotel in North Dakota, and we operated that for a number of years. And after that, I decided I wanted to stay in multifamily, and I wrote a book called The Perfect Investment. But after 3 years of banging my head against the wall, realized that perfect investment's not perfect if we can't find deals that make financial sense. So we expanded a number of years ago into self-storage, mobile home parks. Now we're adding RV parks, light industrial, other asset types like that. Our goal is to provide a recession-resistant portfolio of commercial real estate investments to accredited investors.
Today's episode has been made possible by our presenting sponsors, Wellings Capital, build wealth by investing in diversified, recession-resistant commercial real estate. Smeed CPA, the next frontier CPA firm for strategic investors. And Living Wealth, bank on yourself with private family financing.
What are practical tips from you as an expert and having many clients who are experts of real estate investors? What are practical, actionable things that people can do today, whether it's building their own wealth or improving their finances?
Yeah, I would certainly say diversification, because, there's those comments out there about, well, true experts don't need to diversify. Well, here's my question. If you got a great job in IT or as a doctor or dentist or an attorney or a professional, or if you're enjoying your retirement, are you a true expert? Are you spending 5 or 7 hours a day like Buffett, holed up in your office studying financial reports and reading newspapers and all that? That's a true expert. If you're not him or like him or Howard Marks or Ray Dalio and have a team of Harvard grads, analyzing this stuff, let's be honest, you're probably not a true expert, and you shouldn't have to be. You're already an expert as an IT professional or in retirement or whatever you're doing. my heart is to have everybody focus on what they're really, really good at. Jay Papasan and Gary Keller call it your one thing. Love that with all your heart. Love your family. Love God. Do all those things really well, and then trust other experts to invest your money. And so my first tip would be find diversification opportunities. And, that might mean for you some Bitcoin, some in Wall Street, some in commercial real estate and other alternatives, some in single family real estate. Find some diversification. And like I said earlier, we try to provide diversification across different commercial real estate classes, but go broader than that. Find different funds and different operators. I had a guy call me yesterday. He had $7.5 million from selling his pest control company, and he's spreading it across all types of different things. I think that's great. So that's my first tip. My second tip would be kind of a corollary to that is find true experts. I wrote an article called The Death of Expertise. And it says that when everybody is making a lot of money, it's hard to tell who the true experts are. In fact, maybe there's no need for experts if everybody's making money. The problem is, as you know, Kevin, someday this rising tide that's lifted all boats for 12 years is going to go out. And then we'll see who's skinny dipping, as Warren Buffett says. And when that happens, we want to be investing with true experts. And so for my company, what we do is we go out and try to find people who, companies who have incredible track records, incredible character, incredible teams, great technology, great acquisition strategies, and operational capabilities that are far beyond the friend I know who had a W-2 job just 2 years ago, and now he's raised over $100 million for real estate, and he is an expert. Well, maybe he is, maybe he's not. Time will tell when there's a downturn. But my point is find true experts. And there's some great ways to vet that. There's a great book by Brian Burke called The Hands-Off Investor, and that helps investors vet these experts and tell them apart from the amateurs who are just really good or really lucky.
Paul, that's really helpful. Go deeper. What are some additional practical, actionable things that you want to share with the audience?
One thing is, a lot of us probably everybody wants to save on taxes, except maybe a few people like Warren Buffett who think they're not paying enough. And there's a lot of great tax strategies that the government has set up that the IRS has grudgingly or not had to implement. Things like 1031 exchanges. Those work really well for real estate. The qualified real estate professional status. You might have a job as a dentist, but what about your spouse? Maybe your spouse can become a realtor and you can get that QREP status for filing jointly, which is a massive tax saving opportunity. It's beyond the scope of this call to go into that, but there's just so much you can do there. Rolling over 1031 exchanges, which is a tax deferred exchange until you die, means your kids never have to pay all the accrued capital gains. I have an investor who's been doing that since the 70s, and he keeps rolling forward, and he's in his mid-70s now. He said, there's no way I'm ever going to sell this last set of assets. I'm going to let my kids enjoy all those gains tax-free when I'm gone. So there's a lot of tax benefits of commercial and residential real estate that I'd highly recommend. Of course, many of us know the 2017 tax law that was put in place by Congress and the former president. Incredible favor toward entrepreneurs and commercial real estate investors. Bonus depreciation alone. I mean, literally, we invested, our company invested $400,000 in late December, okay, in a mobile home park portfolio in Buffalo. It's only 2 mobile home parks. Okay, we invested $400,000 late December, got a K1, which is a partnership tax return in March for that with a 1.189, basically almost a $2 million loss on that $400,000 investment. And if you're scratching your head saying, I couldn't have heard that right, that's illegal or impossible, trust me, it's very possible. and it happens regularly. And I mean, if we had another hour, I could break that down for you and explain. In fact, I have some materials on that I could send people to explain why a leveraged mobile home park portfolio using the 2017 tax law is one of the best tax saving strategies out there. So that's another one. I would look for tax saving strategies. The flip side of that, Kevin, is I wouldn't let the taxes wag the dog. Everybody was excited about the opportunity zones that came out with the 2017 tax law, and I think they're fabulous. I really do. At the same time, a lot of people have found them less than satisfying as an investment. A great tax saving strategy, but a little harder to make the numbers work. The cash flow, the appreciation's been tougher in some cases. And so I wouldn't let the tax saving, be the only issue. I would look for cash flow, a great operator, great appreciation first and foremost. Now, the next thing I do, and again, this is reflecting on my thing about finding experts, is I would, if possible, only invest in assets that have built-in intrinsic value, that provide true wealth. And let me back up. True wealth, as I've talked about in other videos, I believe is having assets that produce cash flow. Okay, so it's not the Mercedes or the mansion or the boat or the vacation home, unless those produce cash flow, like some people do. But it's having assets that produce cash flow. And the difference between investing in these assets and speculating is investing, your principal's generally safe, and you've got a chance to make a return. Speculating, your principal is not at all safe, and you've got a chance to make a return. So a perfect example of this, and by the way, I have some cryptocurrency, not a whole lot, but is Bitcoin. It doesn't have a real value as defined by cash flow and rate of return, and it is completely a speculation. So for somebody who cashed out everything they had and put it all in Bitcoin, well, they may end up a billionaire or they may end up delivering pizzas. You don't know. Most of the time, most wealth over decades and centuries is won by those who consistently shoot for hitting singles and doubles with investing rather than speculating. Now, when you invest, my advice is to find asset types or assets specifically that have built-in intrinsic value. A great operator can see a self-storage asset, a mobile home park, a mom-and-pop owned light industrial or RV park, and they can see incredible potential. For example, one of our operators found a mobile home park with 311 lots in Kentucky, and the owner had not visited that park for at least 5 years. And so he acquired it, paid top dollar, or nearly top dollar, $7.1 million for this. And he went in and he made 5 major improvements. He had a goal of making 6, but he only had 5 done, or 5 in progress even, when he got an offer he couldn't refuse. He bought it for $7.1 million, half debt, half equity, meaning he had about $3.5 million cash in it. And we were the largest investor. And 10 months later, he closed, selling it for $15 million. So that $3.5 million turned into north of $10 million in 10 months. That's intrinsic value. And that's what I'm saying, especially in this overheated market, is what people need to be looking for. Warren Buffett calls it value investing. His mentor 100 years ago, Benjamin Graham, was rolling out that term, and it's still the best way to invest today in real estate or any asset class.
Is there anything our audience needs to be thinking about when it comes to inflation and what to do specifically about inflation?
Kevin, before your time, I was a kid and I saw the ravages of inflation in the 1973 4 range, then again in 79 to 84. And we also, we saw, people's pension checks that covered 2 months of their rent or mortgage now cover 2 weeks. That's how bad it was. And it really was. But something went with that made it even worse, or, that made it horrible at least, and that is very, very high interest rates. Of course, that was engineered and brilliantly executed by some folks that tried to fix and rein in inflation, and they did under Reagan. But now we have a historic opportunity, Kevin, and you know what I'm talking about. We're talking about the lowest interest rates in general in 5,000 years of Earth history, coupled with heating up inflation. That combination is something I've never seen in my lifetime. Sam Zell said that he built his fortune from putting low interest rate, fixed rate debt for a long time on assets that were being driven up in value by inflation. And he said that interest rate that he was talking about was low, was 7.1 or 7.2%. Now, even with the recent rate increases, you can get rates of about half that. If that's true, and since it is true, putting low fixed rate debt for a long time on commercial real estate assets or even residential that are appreciating quickly, that have all these great tax benefits too, is an incredible path to wealth.
All right. Well, considering that this is not individualized guidance for the listener, Paul, I'm interested in current market conditions, rising inflation, turmoil in other countries. What specific guidance do you have that you're providing to your clients? What specific guidance do you have for our audience?
It goes without saying that if you've got a 40 or 60 hour a week job, you're making money, or you're enjoying your retirement, you've got a family or just friends, you're not going to have time to be an expert in everything. Can you imagine a great gold medal Olympian trying to train to win multiple gold medals in their spare time or when they're done with work? There's no way. Well, it's the same here. And so my advice, especially for accredited investors, but even for non, is to find...
In times of turmoil, guidance from successful investors and the wealthy is critical for your success. Subscribe to our premium content to ensure you are well equipped for the growing crisis. Would you provide our audience with the best way to get a hold of you and your firm?
It's Wellings Capital, Wellings, capital.com. And I've got special reports on a lot of what I'm talking about, including mobile home parks, self-storage, investing, commercial real estate in general. I've got an e-course on there. You can get those at wellingscapital.com/resources.
There are more investing secrets that are quite powerful for you to build your wealth. If you'd like a VIP introduction to any one of our experts, click on the link below. Make sure you subscribe so you don't miss a single tip from any of our seasoned experts. Okay, watch the next video so you can capture our next secrets to investing. If you're ready, it's time for you to experience financial freedom.
The information contained in this episode are opinions not to be used as individual guidance. As always, consult your own financial team for your investment decisions.